in. So I want to talk about just building your plan, trading your plan today. And if you're new to the Discord channel, there's a lot there. And we, totally get that you're drinking from a fire hose when you start. There's a ton of things to do. It is a massively active Discord channel with a lot of members and a lot going on and a lot of channels. And it can become difficult. And Candy does a fantastic job with new members. So if you haven't gone through Candy's stuff, make sure you watch those videos and understand what to do to get started. I'm not going to spend my time today doing that because Candy does a great job of that. But it's really, really, really important that you don't jump in and just start trading stuff right away. It's really important that you get a lay of the land, spend a week or so. And I get it, you're spending money and I got to get something out of my money. I got to get something out of my money. Hopefully you're investing in yourself for the long term. Okay. If you're subscribing here and, it's $150 a month or anywhere else that you pay, what are you looking to get out of it? Are you looking to get, educate yourself for a lifetime, or are you looking to get a bunch of trades and just go do your own thing or something? My goal is always educate myself for a lifetime. And the more you can learn, the more you can take in, the better the trader you'll be. And I really think you won't hit your stride for 4, 5, 6 months, maybe a year in the service. You won't figure out what it is that you want to be as a trader because there's so many different options here. So what I want to do today is we do have a small group training program, which is really, really great. I think we go in. What I'm going to go through is a very high-level version of that training. We spend a lot more detailed time in there helping people create a trading plan. And I don't really care what you want to trade. Okay, whether you want to be an active trader, someone who never trades, someone who's close to retirement, someone's in their 20s, their 30s, their 40s, someone trading for income, someone trading for growth. It really doesn't matter. A plan's a plan, and you'll figure out the strategies, and we'll help you figure out the strategies that make sense for you. So when you jump into our service here, and I'm going to share my screen, I'm just going to walk through an actual training today on this. And I want you to just take some notes. And if you don't have a plan, or even if you do have a plan, just making sure that all of these things are checked off on your list. So let's just jump into it now. I'm going to share my screen. All right, so in the small group training session, we go super, in depth on these. So this is going to be surfacey, but I think it's going to give you a really good sense of what you should be doing. So a couple of things when you join our service, and first thing you should do is go through the getting started, watch some of the intro videos, watch Candy's videos for new members as she takes you through the Discord, how to participate in Discord, what channels are what, even though there's a lot of different channels, a lot of different opportunities, and a lot of different traders. You got to find what fits your niche, and you can't try to take it all in. Just start small. So a couple things here, keys to your success. And I do this in a lot of different trainings, whether it's trading or outside of this, but understanding that the service is really, a comprehensive skill building journey and not a quick fix. If you're just looking to get some trade ideas that you can just lob on, it's not for you. There's a million of those places. You can go get trade ideas from people. Okay. The goal here is to educate you and make you a better trader. Let me get my face off the screen so you guys can see things without me blocking the screen here. But these skills will last you a lifetime, and this is what you want to put together that hopefully will last you and your family. It helps you build that legacy. Another key here is taking personal responsibility for success, both in this program and in life. I'm big on responsibility and taking ownership. You are responsible for the results you get or you don't get. Okay. We're going to win some trades. We're going to lose some trades. But ultimately, it's going to be up to you. Why did you take those trades? Why did you follow Tom or Igor or to somebody else's trade? Or did you figure out your own trade and it didn't go well? It's really going to come down to you taking responsibility for that. And then being completely committed to becoming an expert trader. It's not a quick fix, as I mentioned. In order to become an expert trader, it's going to take years for you to get there. Hopefully, we get you making money in 30 days on a pretty consistent basis. You know, I think in 30 days, you're already on your way to making good, consistent money. Okay. And we're not promising 10% a month, or you're going to wheel trade and you should be able to retire on 250. And you look at YouTube and you see these things all the time. How you can retire on $250,000. I don't know how you're retiring on $250,000. Okay. Unless you're taking just massive risk, doing crazy stuff, and you're wheeling crazy stocks with high IV or something, or you're scalping, or you're day trading, or doing anything. That's fine. If that's your risk tolerance, then there's great places to go do that. If you want to, though, become a good, consistent trader, start here, but don't try to master it all at once. Let's just figure out some of the things that are working for you. And I'm going to go quickly through this. A couple of ways you can fail in our service. Number one, acting like you already know everything. Okay. I'm doing a training, you know, are you trying to tell me why your trade is, you know, why you're doing this trade or that trade, or how you know this or that? Okay. I don't know it all. I'm here because, hey, I like to learn. Okay. I'm learning from Igor. I'm learning from Gabe. I'm learning from Gary. I'm learning from members. I'm learning from Candy. Okay. I learn something new all the time. Okay. Learn something new all of the time. So no matter what your background, you're going to learn something. Okay. So unless you're making a good 200K, 300K a year, okay, you don't know it all. Okay. So, and if you are making 300 to 500K a year trading, I'm not sure why you're here to begin with. So our goal is to grow. Not that you can't make that. Okay. And we are going to make 200K a year in this here. And some of you are going to make more than that. Okay. But you're here hopefully to become a better trader. Okay. Not asking for help in the group or attending group sessions. Okay. If a good way to fail is don't ask for help. Okay. Just ask questions. And the reason we created the mod channel there for you is simply to allow you to ask questions without getting a ton of different noise, and we go in 19 different directions in the main chat. So it's a good space for you to answer and not have to worry about everybody else there. So again, ask for help. Number 3 here, playing victim or victim statements. You know, well, my trade's not successful because of X. Okay. If something didn't work, it's, again, take responsibility, take personal responsibility. Don't play victim. Don't use victim statements. It's your responsibility. Okay. I followed Igor's trade, or I followed Tom's trade, and it lost. Okay. Okay. Why did it lose? Okay. Why did you lose? Okay. You followed the trade. Okay. Take ownership for it. I'm going to take ownership for my losses. Sometimes not every trade wins. Okay. That's what happens. Okay. We learn from it. We move on. Next thing here, just a good way to fail is to just start following alerts or members' trades without making your own plan first. Okay. Make sure, okay, that you get here and you start to build the plan and the education, which is what we're going to do today. So we're going to spend the time on building a trade plan with you in a really quick overview style here, but don't just start following alerts. Okay. We give you trades. We give you live trades. Igor, Gabe, myself, a bunch of members here. You've got Candy in here, but you've got Stacy, you've got Eddie, you've got Rob, you've got Timur, you've got Andy, you've got a good handful of people. You got Christoph. You have a lot of people sharing their trades in the members' trades as well. Okay. Just because they share it doesn't mean you should follow it. Only follow it if it makes sense for your plan. Okay. So don't start trading till you make a plan, and that might take you a week or two or a couple of weeks. In the small group sessions, it's going to take us 5 to 6 weeks to put together a decent plan, and it's going to take you another 6 weeks to 10 weeks to 12 weeks to hone it in a little bit. Okay. My trade plan evolves all of the time. Okay. I've been building it for 35 years. Okay. So if you think you're going to build it in 35 minutes, okay, you're wrong. If you're going to build it in 35 days or 35 months, you're wrong. It takes years, if not decades, to build it the way you want it to be. Okay, we're hopefully cutting a lot of that out for you. Okay, but you should be effective in 2 to 3 months. Okay, but you'll never be done learning. And then not being patient. Now, focus on this for a year, and you're going to have success. And don't chase shiny objects. Somebody posts something that looks cool. Don't just start jumping into it. You know what, this guy's doing this trade over here, or Tom came up with something new, I'm going to jump. No, don't do it. Okay, stick to your plan. Then you can evaluate to see if it makes sense for you. All right. So there's a couple quick things on being successful in this service. You got to give it a little bit of time. You got to start slow, focus on one thing, and don't just chase shiny objects. And it's really, really hard. Okay. What I'll also tell you is there's a P&L channel here, okay, where people can post their gains. Stay the hell out of there. Okay. So if you want to be focused and you're new, don't go there. Okay. That's the bottomless abyss for people to get lost in trades. Just because somebody posts a win in something doesn't mean you should ask them, well, what was that trade? Stay away. Okay, don't go towards the light. Okay, I don't even like the fact that we have that channel, but we have it. So it was fun posting. We used to post our actual P&L, not necessarily trades, and that was kind of fun. Now there's all kinds of commentary and stuff in there, but hey, stay away from the light. Stay away from the light. Okay, don't go to the light. It's like the movie Poltergeist. Just stay away. All right, and if you do that, you won't be chasing shiny objects. Okay, you're going to focus on your plan. Okay, but if you have some success, it's all good to post it there. But just be careful of trades in there. Okay, but sharing your success, it's great to have success, and we love to hear you with your success. And a lot of times in chat, you guys are posting that you're at a new all-time high or you're doing well. So that's fantastic. We love to hear that. Okay. All right. So number one, before we make a plan, I want you to understand your trading profile. And there's about 7 things on here that I want you to think about before you actually dive into trading strategies. And I want you to create your own trading profile of who are you. So number one, what are your goals? Okay. What's your risk tolerance? What's your trading style? What are your income expectations? What's your account size? What's your BP use or your risk that you want to use? And then how much time do you want to dedicate to trading? Sorry. That's important to figure out. This helps build your profile. Who are you as a trader? Take some of these things down, write down goals, risk, style, income expectations, account size, BP use, and then time. If you write these down, and then evaluate yourself, take the weekend, it's a Friday, take the weekend and fill these things out a little bit and figure out who you are. Okay. And I will post this document in the member trading section. I'll also post it in the Tom's resources section so you guys can find that after this. Okay. All right. Create your own trading profile. Who are you? And I don't want to call anybody out because I don't know they want to share anything, but in the small group session, there's been some really, really good versions of this and some good assessments of people. And I know when Candy does some mentoring as well, she'll go through a lot of these things, trying to figure out what's your mindset, what's your trading profile, what kind of a person are you, so that you can can't even speak today, so that you can match up your trades with your actual trading profile. Making sure that it makes sense for you. All right, so let's get into it. How do we build a plan? Let's walk through it. So number one, understanding or knowing your why in trading. We go through this a lot more in depth in the course, but just a sense here. Knowing your why will help you establish some good, clear financial objectives. Okay, your reasons for trading can vary from others' reasons. So make sure you know your why. And your why is going to ensure that your trade plan is tailored to your goals. So start with your why, put it at the top, and figure it out from there. A clear understanding of your why is going to help you assess how much risk you're comfortable taking as well. Okay? Your why is also going to help you determine your trading style. Okay? What is your why? Why are you doing this? And some good potential whys might be, I've struggled with trading over the years. I've won and lost money. I'm getting close to retirement. I want to learn how to trade my accounts better, or I'm learning how to trade better so that I can teach my kids how to trade and give them a leg up out there, or I've got disabled parents or children or something, and I want to help take care of them better, and I want to create an extra income stream, all kinds of things like that. But those are the important things, because that's going to help you determine whether your goals and your risks really match up. But understand your why. Why the heck are you even here? Why are you doing this? Okay. Well, I wanted to make money, so I saw this guy's YouTube and I thought I would join his Discord. Okay. Why? I mean, what are you trying to get out of it? What do you want to end up getting out of this? Okay? For yourself, for your family, leaving a legacy, whatever you might be. So know your why. Next thing here is setting some goals and objectives. So setting your trading goals and your objectives. First step in your plan, once you know your why, is figure out, what are my goals? Short term or long term? Am I trading, do I want to make X amount within a year, or longer term is something over a year? You win 2, 3, 4 years, 10 years, 20 years, whatever it might be. That's number one. The second part of your goals is, are you trading for income or growth? Which one of those, okay, makes the most sense for you? Okay. Do you want, if for me right now, I'm trading for growth. Okay. I have several sources of income. Okay. I'm trading for growth, trying to grow those accounts X amount by X date so that I can then turn them into income generators, okay, and replace my current income sources or something as I go through. And there's different things that go along with income versus growth. Growth is typically going to require a little bit more risk and a little bit higher return. Income, you want to be a little safer because you want steadier income, so it's a little less of a return and a little more safe, potentially. So knowing what it is, short-term, long-term, income or growth, those things are going to help you. Okay? And I mentioned it on the video the other day, and I've got some decent feedback on it on YouTube and a couple others. But and I was doing some one-on-one coaching, which I don't do a lot in this service, but and hearing from someone who, I think it really resonates, that don't give up your day job. Okay, don't give up your day job right now, because it's an alternate source of income. If you replace day job with trading and it's the same income, okay, yeah, maybe you changed your lifestyle a bit, but what you didn't do is create more income for yourself. So until, wait till the last minute to quit your day job so that you can keep funding your trading accounts, so you can get the trading accounts bigger, quicker, and grow. All right. And multiple streams of income are important, whether it's, your 9 to 5 or real estate, or, you're trading, or selling baseball cards, or whatever the heck it is. Okay, selling crack on the corner, or whatever it might be that is your income source. It's all good. Don't give them up until you have figured out, okay, this trading thing and have switched from growth to income. Okay, but until you move from growth to income, okay, then don't give it up. Okay, multiple sources, multiple streams of income. Okay, Robert Allen, great book, Multiple Streams of Income. It's a good, older now, but still good stuff in there. All right, goal amounts. When you put your goals together, I want to make sure too that you're determining specific dollar goals. Don't say, I want to retire in 4 years. Great. I want you to say in your plan, I have $100,000 in this account. I have $10,000 in this account. My goal is to get the $10,000 account to $100,000 in 5 years. My goal is to take my $100,000 IRA and get that to $1 million in 10 years or 20 years or something. Be specific. So I want you to drop in specific dollar amounts, okay? And then also a specific time frame. So in the sales coaching that I do, typically we call it a next action step and by when. So how much do I want to make and by when? You have to understand that first off. Okay, so how much do you want to make, or how much do you want to grow that account to, and by when? You got to have the specific. Okay, right? Until you have those specifics, you don't know how much you're going to need to generate. So if you're saying I have a $100,000 account and I want to take it to $300,000 in 4 years, great. Okay, how are you going to, how are we going to do that? And the way we're going to figure that out is we're going to look at a compound interest calculator. Okay, so compound interest calculator will help you figure that out. And I've showed it here, I think, a number of times. Okay, and I'll even pop it in the chat here. There's a link if you haven't, and this is just one, there's a million of these out there, but figure it out. Go to that and figure it out. So let's take a quick look what that would be like. And I don't want to spend too much time here. I want you guys to figure this out and go through it. But if I was looking down here and trying to figure out, I have a $100,000 account, okay? I'm not going to put any money in, but for right now, I just want to figure this out. $100,000, and in 3 years, I want to double this account in 3 years, okay? What interest rate will I need to do that? So we'll start guessing, but let's say 2% a month, which is 24% a year. We'll look at the monthly, we'll do a calculation, and boom, we nailed it. All right. So we took, in 3 years, I can take my $100,000, okay, to $300,000 to $200,000. I'll double my money every 3 years, and I need 2% a month to do it. Okay. 2% a month doubles your account in 3 years. Well, I got to go quicker. Okay. I got to double my money in 2 years. All right. Then you're going to need 36%. Okay. Recalculate it. Okay. Oops. In 2 years. All right. So in 2 years, okay, I can double my account. But in order to do that, I'm going to have to do 3% a month. Well, 3% a month means you're going to have to take on more risk. Okay. So 3% a month is a decent amount of risk. Okay. Or I want to take this $100,000 and I want to make it $1 million in 5 years. Start figuring out what that percentage is. Okay. To do that. So in 5 years, can I take 100,000 to $1 million? Well, not at 2% a month. You can't. You can get to 300,000. Okay. So maybe I need to ratchet that up to 36% a year, which is 3% a month. Well, that gets me to about 600,000. I'm still not there. Okay. Well, now you got to start looking at, 40%. Okay. Close. All right. 48%. Okay. Oh, yeah. So 48% is going to do it. So I'm going to turn 100,000 into $1 million in 5 years, but you're going to have to do 4% a month, which is a lot of risk in this. Okay. And it could be taxes, unless you're looking at potentially doing this in your IRA. All right. So can you grow at 4% a year? Does that seem like a reasonable goal for you based upon your risk tolerance? And if your risk tolerance was not quite there, because a couple of weeks ago when the market went down like 5%, in 2 weeks, then people thought this was the Titanic. So if you freaked out and you were staring at your account at 11:50 at night because futures were, your buying power was at 100% and you couldn't get out of trades, right? Well, imagine what would happen if you were trying to generate 4%. So obviously that doesn't match. So now you have to refigure it out. So maybe using that compound calculator, taking 100,000 to $1 million in 5 years isn't going to work. Maybe I'm going to need 10 years to do it because my risk is lower. Okay. And at 2% a month, by the way, at 2% a month in 10 years, okay, you will 10x your account. Okay. So you will hit $1 million in 10 years at 2% a month. Okay. 2% a month, still a decent amount of risk. Okay. But it's not overwhelming risk like 3 or 4% might be, which is a lot higher risk. Right? It depends on your time frame and what you're looking to do. All right. So making sure those mirror up and then base it on realistic assessments of your trading abilities too. If you're just joining us in the Discord here and you are new to trading and new to some of the things that we do, understand that, you've got to learn first. You've got to walk before you can run. So you've got to make sure that, don't get overly ambitious here that, oh, well, I saw somebody else doing, trying to make 100% a year, I'm going to do that. Okay. If you don't have the experience or the risk to do that, then that's dumb. Okay. Following any of these other people on YouTube that are doing 10% a month is dumb if you don't have A, 9 hours a day to be glued to your screen, or B, the risk tolerance to be able to do that. Okay. Or what happens to how are you going to weather a downturn when all of a sudden the wheel is not really wheeling too well and all your underlyings are dropping like a rock. Everybody looks like a genius in a bull market. Everyone's looked like a genius for 4 months this year. Okay. You could throw a dart at a board and have made money. It takes no financial intelligence to make money when the market's going straight up. Okay. However, when the market hits a bump, now we see who's a real trader. Okay. Now we see who's a real trader, who's losing money, who's making money. Okay. Trading is more than just investing. Okay. This is a trading opportunity. All right. So aligning with your risk tolerance here, balancing risk and reward. I want you to also now start to write down, what's your risk tolerance? So again, aggressive targets require more risk. Okay. While conservative targets are going to prioritize capital preservation. Do your goals match with your risk tolerance? Yes, you want to do 3% a month, but you freaked out when the market went down 5% in a week. Okay. Then 3% is too risky for you. Okay. And you were trading too big. Okay. And people out there you're listening and watching the shiny objects of other people that are doing it. It's just stop. You got to listen to your own soul on this thing and figure out what type of a trader am I, and maybe realign with your risk tolerance. Okay. Well, that's not going to get me to my goal, Tom. I want to take 100,000 to $1 million in 5 years, not 10. Okay. Well, how do you do that? How am I going to take $100,000 to $1 million and I don't have 10 years to do it? How would I fix that if I only want to trade at 2% a month because I want lower risk? Okay. The easiest way to do that is you're going to have to put more money in on a monthly basis, right? So not only, so you can still go get there in 10 years, and you can get there at 2%, okay, or in 5 years at 2%. But what you're going to have to do is you're going to have to be depositing $500 a month or $1,000 a month or something like that. Can you do that? Well, you can't if you gave up your day job because you thought trading was easy. So you need to have those other income streams coming in so that you can maybe put extra money aside each month, and it'll get you to your target. And you can get there, right? So, yeah, Igor put it in that you can't make 40% a year while only risking 5%. Okay? Your risk reward needs to align here. And you have two types of risk. You've got directional risk, market risk, which is based upon economic indicators. I mean, look at the Fed announcements, look at the unemployment report stuff. That's all market risk. Geopolitical events, global events. Those are, any of those are market risk events. What would move the market itself? And then you also have price risk of the underlying you're trading. And that's the price movement, that's volatility, could be market events that impact your particular underlying. And if you're trading stocks, then you have the risk you have earnings risk, you have bad news risk. A wheel falls off of a plane because Southwest Airlines does something wrong and Boeing stock goes down. Boeing didn't do anything wrong, okay? Because Southwest didn't maintain a plane properly, a wheel fell off. I'm just using it as an example, okay? But Boeing's going to get hammered, okay? The end for me on most stocks was back when Universal Healthcare, I think it was the CFO at some conference somewhere said, yeah, we see surgeries slowing down. Boom. Crushed his own stock. Okay. He made a comment in a meeting that was not widely attended, and it got broadcast and it crushed the stock. Okay. That's price risk. You cannot factor that in stocks. You have no idea who's going to sink your stock tomorrow. Okay. You may not have any idea on commodities either, but the S&P, at least it's a basket. So understand your risk tolerance, and you can't make 3% or 4% a month and only risk 2% of your, 2% on a trade or 50% of your capital. You're going to have to increase those. So you got to make sure you align with your risk tolerance. All right. And the last thing here is create your own trading rules too. So what are your personal trade rules that you want to adhere to? And they really should, I'm talking like overall for your account. And I have 18 of them that I live by. Trade your plan your trade, never revenge trade, don't try to time trades. Those are all of my different types of rules that over the years I've either experienced it or I've seen somebody else with a rule. And I'm like, you know what, I got to add that to my thing. So you create your own rules. Maybe you only want to live by 5 rules, 2 rules. Okay, maybe you don't need 18 and you don't need 50. Okay, so it's not like Gibbs on NCIS here or something, but that's kind of along my lines is, hey, I got 18 rules, just like Gibbs does. Okay. And I follow them. I adhere to those rules. And I almost, I can't even think of a time that I've really broken one of those rules. Okay. I follow them pretty well. So you have to create a set of trading rules. So far you've come up with your goals and objectives, specific targets by specific time frames. Okay. Based on that, okay, using a compound interest calculator, figure out what would it require for me to do that, number one. Number two, then I have to align that with my risk tolerance, okay, and making sure that this reward that you just set and these goals aligns with your risk tolerance. And if it doesn't, you're going to have to change something. Okay. Risk should win out over goals. Okay. You might not achieve your goals in 5 years. You might have to wait 7 to 10 years to achieve your goal. Okay. But at least you'll achieve it and arrive there safely. Okay. The goal when we fly on an airplane is to get to our destination safely. Okay. Not to fly. And by the way, airplanes are always built by the lowest bidder, just in case you're flying. But, I want to get there safely. So if it takes me an extra couple hours, okay, to get there, I'm willing to wait as opposed to doing something that's unsafe and not getting to my destination at all. Okay, so making sure that your risk tolerance aligns and that you've created your own trading rules. All right. Risk management. So let's talk a little bit about risk management. So in your trade plan, okay, you need to have your risk management laid out. Position sizing. What's the appropriate size for each position and each strategy based upon your risk tolerance and your overall portfolio size? Okay. Avoid overly concentrated positions that can expose you to a lot of risk. Okay. But again, small account, and my goal is to grow that thing. I have a $30,000 or I have a $10,000 account and I want to get to $1 million. Cool. We can do that. Okay. But you're going to have to risk more than 2% in a trade and use more than 50% of your buying power. Okay. And you're going to have to use some other strategies in here, but can absolutely do that. Okay. I'm not saying you can do it in a year, okay, but we can absolutely bring that up. However, you've got to have you've got to have your strategies based upon your risk tolerance and appropriate size. Set clear stop losses for each trade. So again, risk management, set clear stop losses for each trade. Ensure that your position size aligns with your risk management strategy. So again, having stop losses. Okay. A couple of weeks ago, I saw people saying, I let my strangle go past the 2x. Okay. Well, why'd you do that? Okay. If you're, did you not have a trade plan, or did you just ignore the trade plan that you had? Okay. You got to have a trade plan that makes sense for you. Okay. But you got to follow the doggone thing too. Okay. So set your stop losses and follow it. Okay. I'm not trying to let it roll, let it run. Let's let it ride and see what happens. Okay. If you want to do some of that stuff, go to the active trader service. We trade stocks and do some different strategies over there. Okay. And you're looking for a higher risk reward type of a trade. You might be trading butterflies, buying calls, things like that. A 2-to-1, 3-to-1, 4-to-1 risk reward ratio where you can make a lot, lose only a little bit, and stay to that. Okay. If you want to do that, fine. Just make sure that that's where your risk management lies, and that's what you want to do. But can you make more? Absolutely. But you're going to have to jack your risk way up. Okay. Diversification. By spreading investments across multiple assets, you can reduce the impact of those price movements on your overall portfolio for that asset. You can also diversify by strategy and time. Okay. So we can use strategies, okay, a 1-1-2, a butterfly, a ratio spread, a naked put, a 1-1-1 trade, a put credit spread, a call credit spread, all kinds of trades. Okay, there's hundreds of different trades out there, and that you have to choose from. Okay? You can put them all on in different underlyings with different times. Some can be 30 days, 60, 90, 120. If you diversify by those, when last week, 2 weeks ago, when the market went down, and you looked at your 1-1-2s, what 112 trades held up and which ones were showing red. Okay, so which 112 trades held up pretty well in a 5%. In fact, they were actually making money. So what 112 trades were making money while other 112 trades were losing money in that pullback? I'll just wait for one person to pop it in chat. Maybe, maybe not. Come on, anybody? Anybody? Okay. Well, it's the newer 112s were red. Yeah, there you go. We got one person that figured it out. So yeah, your newer 112s were red, and your older ones were making money. Okay, they weren't hurt at all. Well, market get on 10%, and it wouldn't probably affect something that's going to expire in a couple days or a couple weeks. Okay, which is why, hey, we're diversifying by days to expiration. When you're laddering trades on, okay, here, you're going to have some trades that are going to react quite different, okay? Because, hey, the newer trades, there's less vega, they're farther away from the money, so there's less theta, and, more theta equals more negative vega. Less theta, okay, is going to help you a bit. So if you've got, if you're trying to hit a ton of vega, or I'm sorry, a ton of theta, you're going to have a lot of negative vega, which means you're going to be very susceptible to volatility increases. The more theta you have, the more negative vega you're going to have. The less theta, okay, the more positive vega, or at least the less negative vega you're going to have. So you're going to be not subject to the price moves or volatility moves. Again, so diversifying by strategies, stay consistent. Okay, which is why, as a new trader, and I want to call this out to the new folks out there, I know it's not great that if you're trying to start with a long-term 112 trade, that it's going to take me 4 months to build up a full ladder. Okay, well, what do I do in the meantime? I'm not making any money. Well, no, you're learning in the meantime. Okay, but I get it. Yeah, I'm paying $150. I gotta get that money out of this service somehow. Okay. Your money's going to come in 4 months when you're making a steady 2-3% a month, and you can hit your goals in 2 to 3 years. You can double your money. If you can double your money every 3 years, what do you care how much you make in the next 30 days? Okay? Understand your target, right? To begin with. So as you're putting these on as a new member here, start small, pick a long-term 112 trade, start it now. Okay, in 2 weeks, we'll be able to put another one on. Every 2 weeks, we can get another trade on. But Tom, those aren't going to come, I'm not even going to close those naked puts for 90 days. What do I do? Learn something would be number one. And then number two would be maybe put on some regular 112 trades, okay, that are 60-day trades that are come off in like 45 days. So you're starting to generate some income. Maybe you put on a strangle trade that's going to come off in 30 days or 15 days or something. Maybe you put on a put credit spread or something. What did we closed a 120-day bond naked put today. How many days in that trade were we? 4. We put on a 120-day trade in bonds, and it closed in 4 days. Okay, I'm not saying that that's going to happen all the time. I was expecting that to take 30 days. Okay, but in 4 days, I made $844 on that. All right, well, that would pay for 6 months worth of membership or something, 5 months. All right, so just understanding that as you start to build, okay, you can start to work in other trades as you learn them. But just what do I do while I'm waiting? Learn something. All right, let's just keep rolling here. Hopefully I'm not like yelling at you guys, but campaign trading versus opportunistic trading. So I want to make sure that as new members and as current members, you understand the differences. Campaign trading involves adding positions based upon either time or days to expiration or performance, like stops or profit targets are hit. Okay, they're not based upon any market or price moves or any other setups. It's just a regular trade that you go in and you come out. You go in, you come out. Either based upon I'm going to put this trade on every Monday. I'm going to put this trade on every Monday, Wednesday, Friday. I'm going to put this trade on every month. I'm going to put this trade on every time I stop out or take a profit. Okay. A bond trade's a great example. Okay, bond trade, okay, closed in 4 days. It's quicker than I anticipated, but it's a campaign trade, right? Because that's how that strategy was set up. So I put another one on today. Okay. If I've got one running in oil, if I've got one running in ES right now, I don't like them in a lot, or not in oil. I'm not going to do that in oil, but in some in ES and in gold or something like that, maybe. And if it's a campaign trade, Igor's doing the Monday, Wednesday, Friday SPY puts. Perfect. He's been doing that, longer than I've been doing a bunch of trades. Okay, it works great. It's a campaign trade. Monday, Wednesday, Friday, you put the trade on. Okay. Well, Tom, what's the market's? And I see you guys asking, Igor, do you still put this on if the market's down? Is it a Monday, Wednesday, or a Friday? Then the answer is yes. Okay. Okay. So he's going to keep putting, it's a campaign style trade. Okay. With campaign trades, we rely on positive expectancy to generate gains over the long term, which means you have to be consistent on putting those on over the long haul. So understand if you want to do, and not, I'm a mix. So I do some campaign trades, and then I also have opportunity trades. Okay, there's a difference. But campaign trades, you keep putting them on the basis, a regular basis, because you're relying on that expectancy for that trade to work out. Okay, you can back test them, you can check them out, see if they make sense for you. Okay, but you got to be consistent down here, and consistency is one of the keys to being a great trader. You have to be consistent. You have to continue to put trades on, one after another, after another, after another. Even if you're losing, you've got to keep putting the trade on if you have that positive expectancy in that trade. Oh, I got stopped out on 2 strangles, I'm going to quit it. Now, I'm not saying that's a campaign trade, but you can't stop being consistent. If you know you have a 90% win rate, and you know that you have positive expectancy because your average win times your win rate is greater than your average loss times your loss rate, over time, you got to just keep putting that trade on until the end of time, okay? Or until that no longer works anymore. Okay, but just because you have a couple losses in a row, you got to stay consistent. This is where, that 90% of traders fail, is they don't stay consistent. What they're going to do is they're going to see somebody posting something in the P&L channel here, and they're going to say, wow, that looks great. Tell me how you do that. Can you share your trade? And what strikes did you use on that? What delta are you using on that trade? You see it all the time in there. As soon as I see that, I'm thinking, oh, someone's chasing the next shiny object. Okay. As a newer member, stop chasing the shiny object. Just focus on one thing at a time, and you'll be in great shape. But you got to become consistent with trading. Okay. Don't start asking traders, well, what do you do with this trade? Because I like that trade. Okay. Well, does it fit your plan? Does it make sense in your plan? Oh, you don't have a plan? Well, get the plan first and then figure it out. Okay. Then there's opportunity trading. So opportunity trades involve adding trades when the conditions are right according to your trade plan. Any trade can be an opportunity trade as long as you have a defined criteria for the trade. So for me, if strangles are an opportunity trade, but they still also have positive expectancy for me, because I know that, based upon my setup, that if I do these consistently, I'm going to win over time. My average win times my win rate is going to be greater than my average loss times my loss rate, and it's going to generate a good amount of income for me. So I'm going to put on strangles, but I only put them on, okay, now, okay? I only put strangles on now when the opportunity arises, and I love to spread them out. Okay, I love to see other potential trades out there that could potentially help me be more successful with it. So, oh, ding, stupid live cattle. All right, anyway, took all day. All right, so opportunity trades. There's a good example right there. Is I just popped a live cattle 112 trade on today. I didn't really get the price I wanted, but I know the market's going to close. So I wanted to get the trade on completely for the day. It's an opportunity trade, okay? The setup is right. It looks good for me. I had the the buying power, the opportunity to do it, so I put a trade on, an opportunity trade, okay? I had an opportunity the other day for a put and a call 112 on the same underlying, okay? It's an opportunity trade. The 60-day DTE 112s, opportunity trades. Ratio spreads, opportunity trades. Okay, they don't have to go on every day, but as I see them and I put them on, but I got to stay consistent. So I hope this makes sense, but figure out, okay, which trades you want and how you're going to do them based on that. And then select your strategies. Okay? Who are you? Okay. What's your why? What's your goals? What's your risk tolerance? What's your account size? What's your trading style? Right. So the key here is who are you as a trader and what strategies? Okay. A 112, we do a lot of them here, but it's not everything that we do. You can certainly set that up and be very successful with it. And most people are. Okay. But that might not be everybody here. Okay. Maybe you want to just do you don't want to do the long-term ones. You want to just do 112s on anything. And maybe you want to do them at 90 days versus 60 or 120 or something like that. Maybe you want to do them at 180 days or something. Whatever you want to do, figure out what makes sense for you. Okay. All right. So start as a new member. Just take some of the basic trades. We've figured out stuff for you. I've tried to make it simple for you to get started on using some core trades. So which strategies fit? Core versus spec trades. Okay. Start with the core trades and forget the spec stuff until you understand your core trades. For me, the core trade, the ES long-term 112, boom, do it. It's a campaign trade. Okay. Once you've got that and you understand that, then maybe I want to do some other 112s on futures like live cattle or oil or gold or bonds or something like that. Great. Once you understand it, okay, then you can start to branch out to some of those. Okay. Strangles. Okay, I want to do some strangles. Okay. What do you want to do a strangle on? Okay. Does that fit your trading style? Okay. The one thing with a strangle is, and because we're premium sellers, as premium sellers, our losses will be larger than our gains. Okay? Usually a 2x loss, a 3x loss, something like that, and a 50% take profit on some trades or 100% take profit. But even if at 100% profit taking and a 2x loss, your loss is always bigger than your gains. It is that's being a premium seller. Okay? In exchange for high probability trades, we take decent risk. But what we're looking for is positive expectancy that the average winner times the win rate is greater than the average loser times the loss rate. But that's why you got to go back here and stick to your position sizing and your stop loss risk management. If you stick to these, you're going to be great. And if you stick to being consistent, you're going to be great. Okay. So don't try to figure anything new out. Just stick to the basics as you get started. Okay. Start to generate some cash, start to get comfortable, start to get confident in how you're doing. Then you can start to experiment with trades, okay, and find what works for you. Okay. Andy and I are going to do a session in a couple of weeks or so he can go through his trades a little bit more. Okay. Maybe that's going to resonate with you, different than my trades. And we're different. We have similar goals, but we're very different in what we're doing. It's all good. Okay. Rob and I are different. Igor and I are different. Candy and I are different. We're all different traders. Okay. I'm trying to give you something that's going to help you get started and get some success going. And then you can start to experiment. Then you can go down the rabbit hole of the Discord and all of the stuff that's in the Discord. And it's immense. Okay. How do you stay focused? You stay focused by following the instructions that Candy gave you and that we give you by going to the getting started. Okay. And when you get to getting started, okay, you read through the strategy guides. Okay. You watch the strategy guide videos. Okay. You read the posts that are in there. Okay. And you read through everything. You take a week to get through that. You watch the new member orientation videos. You just spend a week in getting started. Okay. Then from there, you jump into strategy guides and you start watching more in those videos and you start watching like this video and you get this plan built. Okay. And then you start implementing that plan. Okay. Yeah, it's going to take weeks to get started. This is not just like an alert service like, oh, Tom did it, I'll put that in a trade on. Why did you put that trade on? Okay. Because Tom did it. Well, you don't even know why I did it. Maybe your account's not the same type of account size. Maybe that's not a trade that fits your risk profile. Don't just blast things out and on because you want to. Okay. And then figure out what strategies fit. Figure out your core, your spec trades. Okay, what are your ride or dies? What are your trades that you're going to put on all of the time? Use that strategy builder that's in the spreadsheet. I think that's really a valuable tool that's in there. You can start to play around with what strategies do I want. And if you could, I would tell you to try to just put on one strategy or two at the most. Then you can start to add 3 or 4. If you look at mine, there's only 4 strategies that are core to what I'm doing. And then the rest are all just lumped into spec trades that are only using a small percentage of my account. Okay. That's it. If you're an active trader, there's only 2 strategies that I use. Okay. I have not lost a trade yet. Okay. So I have a 100% win rate. I'm not saying it because I'm bragging, but I'm saying it because I only have 2 types of trades and I have a certain setup I'm looking for. I will probably lose trades. Okay. It's going to happen. Okay. But I'm just following my plan. I'm looking at, what it is that I'm trading, and then I just follow the plan. And hopefully it works out. Okay? If the market does what I expect it to do, and I'll lose if the market doesn't, but I'll stop out and I'll move on. But yeah, and Metabyte, yeah, it's a great thing. It looks very steep learning curve, but as you go through what I'm going through today, I just want you to sit back, go through the getting started stuff, ignore everything that's in chat. Okay, ignore all of that stuff. Don't even go into the main chat. Don't go into the P&L piece. Don't go into any of the other channels. Don't go into member trades at all. Don't go into the forums. Don't go into anything. I know Candy does an overview on don't go into anything. Just start with the strategy guides and the strategies. Ignore all of the other noise and all the conversations going on, and just focus on building this plan that I'm giving you here today. Okay. The last couple things, and if you do that, okay, you're going to be in great shape. Then you can start to pay attention in chat. But in the beginning, stay out of chat, stay out of the P&L, stay out of the forums. Don't go to any of those things. Okay. Stay away from the light. Don't go into the light. Okay. Just follow the strategy guides and my basic trades there, and really go through the stuff about building your trade plan. You do that. Okay. You don't even have to go through all the videos. Just stick with the key videos on building your plan first, and the 112 trade or the long-term 112 trade, and just start there and go into asking some questions after you have watched some of those things and put things on. Okay. Don't ask me, well, what should I do? How do I get out of my trade? If you ask me why should I get out of this trade, then I know you didn't have a plan. Okay. Should I get out now? Should I roll up my PDS? I don't know. Should you? What's your plan say? Okay. You didn't build a plan. Okay. Or maybe you did build a plan, it's your first time through, but maybe your plan's not detailed enough. So we'll help you. Okay? But I need you guys to kind of figure these things out and understand it. All right, trade management. Again, if you're entering a trade, what's your criteria? Know your loss before you look at your profit potential. Size your trade for a 2x. If the 2x loss on a 112 of the naked puts is your max loss, you can't put on a 112 trade where the 2x naked put loss is greater than whatever percent of your net lick was your maximum loss. Okay, so if you pick a 2% max loss on all your trades, you can't size a trade for a 2x loss that would be bigger than 2% of your net lick. If you do that, okay, you're not going to size properly. Okay, so know your loss before you look at your profit potential. Okay, always go into a trade looking at the loss first, not how much you can make. Okay, that's at least the way I'm looking at it. Okay, and then a little TNA is good. Okay, are you with the trend? Or are you against the trend if you're putting on discretionary trades? Just some basic moving averages, some MACD, maybe some RSI, and that's about it. Okay, don't get carried away with too much stuff. Is the index, is it going up? Are your moving averages going up? Are you above your moving averages? And does it look like the MACD and the RSI are rising? Okay, yes. Okay, well then the stock's moving up. Okay, well, so don't trade against it. Okay, just understand if that's your trade. So depending on what the trade is, okay, figure it out. If we're going parabolic to the upside, do you think putting on anything with naked calls is a good idea? No. Okay. So not when we're parabolic. Now, if we pull back, okay, and we're heading lower, maybe. Okay. If we bounce off a 21-day moving average and start heading higher, would you start selling calls again? No. Okay. It's just a normal pullback, and the next leg higher is on its way. Okay. That's not the time to start selling calls. Okay. Stay away from the light. Don't look at what other people are doing. Okay. Follow your plan. Okay. You're not smarter than the market or your own plan. Okay. So just follow your plan and know your exit criteria. And my last thing here, and I'll wrap it up, and we're at 1 hour on the dot. Okay. Portfolio management and tracking. Okay. The goal of portfolio management is to set an easy way to review your portfolio. Okay. Track your trades. Okay. You can use my spreadsheet. You can use your own spreadsheet. What I don't want you to do is, this is not that I don't want anyone to get upset, but don't look for the fanciest thing out there that looks cool. Just find something that's easy and simple to use. Okay. I don't know that my spreadsheet's that easy and simple to use anymore. Okay. It used to be easier and simpler, but I wanted to automate more of it so that I didn't have to do so much manual work on it. Okay. You just simply want to track your trades, and you can go back and look at them over time. Okay. So iPhone, yeah, 2x a 2x naked put loss on a 112. I would only close the naked puts. That is correct. I manage the naked puts and the put debit spreads separately, but that's in my plan, spelled out in my plan that I manage them separately. All right, so portfolio management here, nightly charts. Okay, I'm looking at my stats every night, my delta, my theta, my buying power. Really, it's all about buying power. The other two are just nice little indicators just to make sure that I'm within the lines. I look at my net lick, my realized gain losses, and my monthly stats just briefly. Do I see anything that looks out of line? If so, tomorrow's a good day to fix it. Not tonight. Okay, I'm logging off and I'm going to drink, or I'm going to watch TV, or I'm going to do whatever. All right, I'm going to go play golf. Basic technical analysis. I do this every night. I look at my underlyings. Okay, my watch list is not that big. Okay, I look at a handful of futures and I look at a handful of nothing else. Okay, so I look at a handful of futures. I don't really care what stocks are doing or sectors are doing or any of that stuff. Right, I just want to see what can I do tomorrow. If I have buying power, that means I can put a trade on. Where would I want to put my trade? Figure out where you can. And then your daily portfolio review. This is like a 10-15 minute a day deal. Review each trade. I can knock out my portfolio in minutes. Okay. Review each trade. Are there any naked puts that may need to be closed because they're 95% or better, or close or something? Is there a put debit spread that maybe is at 25% of profit, of your max profit or higher? Right? Does it need to be adjusted? Should I close it? Is there anything that's in trouble that's getting close to a 200% loss? Okay. I don't even look at anything that has a loss until it gets to about 150%. Okay. I won't even look. Okay. It is what it is. We'll deal with it tomorrow. Is buying power okay to add new trades? If not, nope, lock down. No, I don't even need to do technical analysis and look at anything. If my buying power is at 60%, well, what are you looking at trades for tomorrow for? Okay. Doesn't really matter what the trades, what tomorrow's trades are if I have no buying power. My buying power right now is 50%, 50.3 right now as of 2 seconds ago. Right. I can't put in new trades on. I did put a new trade on today. I did put a live cattle 112. I'll post it shortly. I put that on today, but I'm right at 50% now. After that trade, I'm done. Okay, no sense looking at charts, okay, over the weekend. The only reason I'm looking at it is to give people a sense of some opportunities for you to trade, because I can't trade on Monday unless my buying power goes down. But I will help you out by giving you some ideas of what charts are looking where. And you've got Candy doing her market profile. She's telling you where things are moving. You should be able to use either Candy stuff or mine, which is almost the same. Okay, she's a little bit more in depth than I am. It's fantastic stuff. Look at what Candy's doing and then decide what trades could I potentially put on. Okay, then I'm looking at the same types of basic things with a little bit more rudimentary analysis. And I'm figuring out, is there a trade here for me or not? And if there is, what trade? Is it a 1-1-2? Is it a strangle? Or is it a leap or naked put or something like that? Okay. Nope, doesn't look like any of those would fit here. Move on. Okay, pretty simple. And then if I'm looking at there, do I want to add any trades? Okay. And then how do I know what to put on? Well, I start with the order of my core trades. If I have buying power, can I put on a new long-term 1-1-2? No, I'm full with all 8. Okay. Even though 2 of them have the naked puts closed and are just a PDS, I have my complete ladder done. I'll move to the next thing. Do I have all of my buying power that's available for 1-1-2 trades on? Yeah, I'm full. Okay. Do I have all of my strangles on? Yep, I'm full. Okay. Well, then I can go back and put on pretty much anything I want then. Okay. Now I can go back and put more strangles or more 1-1-2s on. As long as I have my minimums in, then I can go over as long as I have buying power. Okay. Well, and so what's setting up the best? In fact, I did that live cattle 1-1-2 trade today because I had a little bit of buying power. It looked like a good setup. Where it is here, it looks like a potentially decent strangle setup as well. Okay. But I wanted a 1-1-2 trade on. So I put that on. We'll see what happens with that right now. And I like the setup of the trade. We'll see if it works. All right. And then monthly review, what works, what did not, if it's working, if it didn't work, why? But you also got to make sure that, is there enough data to warrant a change? Have you traded something for 3 to 6 months or more? Okay. And bottom line is, if you don't give yourself enough time to figure out if that strategy is going to work for you, okay, you're going to be bouncing from left to right to left to right. Okay. But you got to stay consistent in trading. So I hope this was helpful to you guys. We did keep it to about an hour today, so I think that was pretty good. Use this video, go back and watch it, take this sheet. If you want to really build that trade plan, come join the small group training session on that. We're going to spend 5-6 weeks. We're going to evaluate your plans, every step of your plan. We're going to go in depth, answer your questions, okay? Figure out exactly how to set it up for you. Okay? And putting something together that makes sense for you and your particular criteria, and not me or Igor or somebody else here. Okay, everybody's trade plan should be different. Okay, because everybody's why and everybody's risk tolerance and everybody's account size should be different. The only thing I'll tell you is that if you're a new member here, stay away from the light. Okay, don't go into the P&L porn channel. Don't go into the main chat and get lost. Don't start cranking through member trades. Don't even go into the forums on anything right now. Stay away from all of that stuff. Okay, and just focus on the getting started, the strategy guides, and this thing here too, the how to build your trade plan. There's 3 videos on that. Just start with that stuff. Okay, then you can expand out. But as new members, just take your time. Okay, there's no hurry. Okay, we don't need to get rich tomorrow. Okay, we can get rich slowly and still get rich. I mean, slowly doesn't mean in 20 years. Slowly means I can double my money every 3 years at 2% a month. That's not too shabby. Okay, I'm going to beat every hedge fund out there. I'm going to double my money in every 3 months. If I had 100,000 now, I'll have 200,000 in 3 years. I'm sorry, 3 years, not 3 months. Okay, I'll have 200,000 in 3 years. I'll have 400,000 3 years. After that, I'll have 800,000 3 years after that. I'll have 1.6 million 3 years after that. Okay, and you just let it keep compounding. Then I'll have 3.2 million. Then I'll have 6.4 million, and then I'll have 12 million if I have enough time left on the planet. So hope that makes sense for you guys. Stick out of this stuff. Okay, stay away from the light. Build your plan, trade your plan, and if you need help, get the moderator channel. Ask us for help there. If you want to ask in the main chat, you can. Just understand you're going to get a million answers. Okay, and it's going to get buried. So just make sure that it doesn't mean there's not a lot. There's really great members here. Best service I've ever seen. Okay, members are super helpful, most of them. So not everybody, but most people are pretty helpful here. And you're getting really good, solid advice from most of the members. Okay, and the ones that usually give you the advice are usually the ones that are pretty solid on that. So they'll help you out. And if you want an immediate answer, you pop it there. And if I'm not online, someone's going to answer your question at midnight if you pose a question in chat. Just follow along. and make sure that that's the advice you want. All right, guys, have a great rest of your day. Have a fantastic weekend, everybody. We'll post this video up, and we'll see you guys in the Discord channel. All right, see you then. Bye-bye.